Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is January 22nd, 2019, and I'm definitely going to be talking about wheat today, although there are a lot of markets we could be looking at, but wheat is just kind of in a real tight consolidation, and I want to show you all the different ways in which we can evaluate a particular market that is in a consolidation and the power that can come from that. So we begin with obviously the deep dive, and here it is, trading range. Anytime you see a market with little sideways arrows, that means it's in a consolidation. There's consolidations and then there are tight consolidations. So I just want to sort of preface this and kind of go through a little more information. So the trends are mixed. The short and intermediate to the long side or to the downside, and the long term is a little ambiguous, but anytime you get this little asterisk here, which means that there's fighting in between the different types of trends and a consolidation, that's a good sign, because that means that there's going to be movement that's going to come here. The technical rating will give us an indication as to which direction it's going to head, although it's not always perfect, but in this particular case it still points to the upside for wheat. And when you combine this particular trading range along with either a support or resistance level, that will give you an idea as to where the real strength to the market is, in this case on the support side, and we can certainly see this from a visual to really get an idea as to what's taking place here. So here are daily bars for wheat, and I want to point out that's a long extended sideways consolidation. In fact, I'm going to flip back to the website here and make this point. Here is wheat down here, and the only thing that's showing up here is a lazy, and because this is weekly bars for this particular Pro Alerts, we have 13 weeks of consolidation, 13 weeks of not really getting overbought or oversold. So when you look at this, you can really appreciate the fact that it has been in this sideways consolidation, actually longer than that, but with these daily bars, you can see that really hasn't gotten overbought or oversold in any stretch of the imagination. And the other thing that's kind of unusual here is this yellow line here represents the 50-day moving average. It's virtually flat, especially right now. And this gray line right through here, that's a 200-day moving average. That also is virtually flat. So what you have is just a lot of nothing going on, and this can only last for so long. It can last for another 2 weeks, so this isn't just short-term oriented, but it does mean that there is going to be some type of an explosive move here eventually, and there's opportunity to be had. So here is the resistance level right up through here, and we have a support level, and there's multiple support levels going back in time. We got a 44 way back when, 29 right through here, and this number is shaded a little bit, but I believe this is a 50 last time I saw it. So a 50, a 29, and a 44, all basically in the same area. And so that means that we're in an energy zone. Energy zone from the perspective that it's pinballing back and forth, maybe not necessarily touching it, but not testing and breaking through this resistance and this support. So that's important to us. The other thing is that when we look at our energy level, we can see that wheat and Kansas City wheat are both down in the zone. Now, Kansas City wheat is in a full consolidation, but wheat is very close to it. In fact, it's basically bouncing out of it just a little bit right now, but it was just recently in this blue area. So we have both wheats along with corn and even coffee. All four of those markets are actually in, or were just recently in, a consolidation. And so that always bodes well for some type of an explosive move for the market. The other thing that I'll point out is if we look at the depth gauge, and this is a longer term indicator, but it's in neutral. you can see that the market from this case here is wheat just kind of consolidating sideways, and because of that our depth gauge is also moving sideways, and so it's hard to see exactly what it is, but we have a neutral or mixed rating on wheat right now, and this only happens, at least over the last 3 years or so, 16.1% of the time. Anytime you get a market that's not full-fledged bullish or bearish, it's basically in a turning phase, either on the upside or to the downside, that's a market that you want to watch, because it's just a foregone conclusion that eventually there's going to be a big move. And when you look at the market and you see that it's been consolidating for a long period of time, it's got well-established support and resistance level. I showed you the energy level, and the fact that the market is in a consolidation there, it all bodes well for some type of a movement here. So if we look at the seasonal tendencies, here we are kind of late, in January, and we have three separate bars here. We've got a 5-year, a 10-year, and a 15-year seasonal outlook for the market. Now, in time, they're going to go in different directions because the seasonal tendencies for wheat can be erratic for over the years. But there's continuity here when it comes to later January and going into at least the first couple of weeks, maybe almost 3 weeks of February. It's typically a little bit bullish from that side. Other times it can be erratic or not as consistent as we might like, but there are times, and we're coming close to one of those. So when we have this explosive move that I've been talking about that always ends the consolidation, the fact that our technical indicators and the seasonal tendencies, no matter which of the three different seasonal charts you're looking at, all combined here together, that there's a really good opportunity for some good money to be had from a trading perspective. So you're only going to be in that trade for maybe a couple of weeks or so, but as it stands right now, our systems are actually long the market right now. They have 3 different systems that are actually out there taking advantage of the potential move. There's going to be a little more volatility here since we're not past this little phase right through here, but we're going to be looking for some type of a movement here for the market to actually have some type of a really nice movement, something that we can actually take advantage of. When you come down to the seasonal charts at the bottom there, you can always pull up a seasonal outlook to the market, and here we are where we're looking at getting into February, the lows meeting around the 29th and the 30th, at least on a calendar year basis, and this is what we're looking at as far as a movement from the low to the high for just the 21-day outlook. So it's just a window. It's not really looking really far into February. It's only going out 21 days. But from the low to the high, that's what the L2H represents, low to high. That's almost a 15 3/4 move as far as a projection for wheat. So with the consolidation, the explosive move that we're looking, the outlook when it comes to the projection for wheat, you might want to take a look at this particular market and not necessarily wait for the breakout above this upper threshold here, which is at 537 and 5/8. That's what that resistance level is on the March contract. But just simply look at this as an opportunity with the moving average basically just flatlining right through here. It's highly unusual. You'll see that kind of a condition. So I guess what I'm telling you is that you need to be looking at wheat and maybe taking advantage of that particular market. And if you are interested and you're not interested in trading in the future side, there's a very good ETF that's out there, WEAT, that emulates wheat. So you can do it in the futures and you can do it in the ETF. So watch that particular market, look for an opportunity. It'll probably only last until maybe the second or third week of February, but at least still good opportunity from that side. Obviously watch the systems, which are long right now, and they will give an indication as to whether or not they're going to add more positions, or if there's going to be more of a consolidation. They may unwind some of the positions only to reestablish themselves, but whatever the case will be, watch the market, watch the systems, and hopefully we can take a really good advantage of the potential movement that's coming up here in wheat. We will look at some more markets later on. Thanks for watching. Bye-bye.